Today, we're diving into a critical topic that has been making waves in the mortgage market: the looming risks as renewals and delinquencies rise. This issue is becoming increasingly significant as many homeowners are approaching the end of their mortgage terms and are faced with the reality of renewing at higher interest rates. This shift is putting pressure on household budgets and, in some cases, leading to an increase in delinquencies. The current economic landscape is certainly challenging for mortgage holders. Interest rates have been on the rise, making the cost of borrowing more expensive. For those who secured their mortgages when rates were at historic lows, the prospect of renewal at today's rates can be daunting. This situation is not only affecting individual homeowners, but also has broader implications for the real estate market and the economy as a whole. One of the key concerns is the potential increase in mortgage delinquencies. As homeowners struggle to meet the higher payment requirements, there's a risk that more people will fall behind on their mortgage payments. This could lead to a rise in defaults, which would have a ripple effect throughout the financial system. Lenders could become more cautious, tightening their lending criteria and potentially slowing down the housing market. Moreover, the pressure on household budgets could lead to reduced consumer spending, which is a significant driver of economic growth. If more income is directed towards mortgage payments, there's less available for other expenditures, which could impact various sectors of the economy. This scenario underlines the importance of strategic financial planning and seeking professional advice to navigate these turbulent times. For those approaching mortgage renewal, it's crucial to start the process early. Engaging with a mortgage broker can provide valuable insights and options that might not be immediately apparent. Brokers can help in finding competitive rates and terms that suit your financial situation. Additionally, exploring options such as refinancing or adjusting the amortization period may provide some relief from higher payments. In conclusion, while the rising risks in the mortgage market present challenges, they also offer an opportunity for homeowners to reassess their financial strategies. By staying informed and proactive, it's possible to mitigate these risks and make well-informed decisions that align with your long-term financial goals. As always, we're here to provide you with the latest insights and guidance to help you navigate the complexities of the mortgage and real estate markets. In recent developments, the Bank of Canada's Governing Council reached a strong consensus in October that a 50 basis point rate cut was imperative. This decision was driven by the Council's observation of strong indicators that inflation had settled near target levels and emerging concerns over weaker economic growth and softening employment figures. The summary of the Governing Council's October 23 rate meeting deliberations revealed that, while some members considered a smaller 25 basis point cut, there was overwhelming support for a larger adjustment. The Council felt increasingly confident that the pressures driving inflation would continue to decline, thus justifying a less restrictive policy stance. However, there was some concern among the members that such an unusual move of a larger cut could unintentionally signal economic trouble, potentially leading to heightened expectations for further accommodative measures. Despite this, the Council ultimately decided that the larger cut was necessary to stimulate demand and maintain a balance between inflation control and economic momentum. A key factor in this decision was the bank's confidence that inflation, which had dropped to 1.6% in September, below the bank's 2% target, no longer warranted the previously restrictive policies. Additionally, the Council noted the federal government's recent decision to lower immigration targets as a potential downside risk, as slower population growth could dampen housing demand and consumer spending. The Council acknowledged that the slowing rate of population growth could act as a brake on total consumption growth. They anticipated that consumption growth might slow in the near term, even though reductions in interest rates would ultimately support stronger growth in consumption. Another concern highlighted was the ongoing wave of mortgage renewals at elevated rates, which could weigh heavily on consumer spending. The Council noted that many fixed-rate mortgage holders who had recently renewed did so at higher interest rates, thus reducing the income available for non-mortgage spending. At the same time, the Council observed that higher interest rates have led many Canadians to increase their savings and cut back on discretionary spending, further restraining economic growth. This shift in consumer behavior signifies a more cautious approach to spending amid financial uncertainties. Looking forward, the Governing Council emphasized that future rate decisions will be made one meeting at a time. This approach reflects their confidence in managing inflation effectively while allowing flexibility to adjust policy based on evolving economic conditions. The Council remains guided by incoming data, acknowledging the uncertainties surrounding growth and inflation drivers. The Greater Toronto Area home sales saw a substantial increase year over year in October 2024. This uptick in sales activity came alongside a rise in new listings, although the listings grew at a lesser annual rate, resulting in tighter market conditions compared to October 2023. The average selling price also experienced a slight annual increase. Jennifer Pierce, president of the Toronto Regional Real Estate Board, noted that despite being early in the Bank of Canada's rate-cutting cycle, many buyers were encouraged to re-enter the market in October. This resurgence was largely due to improved affordability brought on by lower borrowing costs and relatively stable home prices. In October 2024, Greater Toronto Area Realtors reported 6,658 home sales through the Toronto Regional Real Estate Board's multiple listing service system. This figure marks a significant 44.4% increase compared to the 4,611 sales reported in October 2023. The number of new listings entered into the system also rose by 4.3% year over year, reaching 15,328. On a seasonally adjusted basis, October's sales figures showed an increase compared to September. However, the Multiple Listing Service Home Price Index Composite benchmark was down by 3.3% year over year in October 2024. Despite this, the average selling price rose by 1.1% compared to October 2023, reaching $1,135.15. Seasonally adjusted data also indicated a slight increase in the average selling price from September. Jason Mercer, Chief Market Analyst at the Toronto Regional Real Estate Board, pointed out that while market conditions tightened in October, there remains a considerable amount of inventory, offering buyers a variety of choices. This availability is expected to moderate home price growth over the coming months. However, as inventory is absorbed and home construction continues to lag behind population growth, the pace of selling price growth is anticipated to accelerate, possibly by spring 2025. TRREB CEO John DeMichel emphasized the role of policymakers in enhancing affordability by reducing taxes on home buyers. He expressed support for the Conservative Party of Canada's pledge to eliminate the goods and services tax on new homes sold for under $1 million, viewing it as a crucial step to providing relief for new home buyers. He also suggested that phasing out the rebate between $1 million and $1.5 million would better address affordability issues in high-priced markets like the Greater Toronto Area and Vancouver. As we look ahead to the housing market over the next 5 years, from 2025 to 2029, experts predict a period of gradual change and adjustment. The market is expected to remain strong, yet the pace of home price increases is likely to slow compared to the rapid surges seen in recent years. Analysts anticipate a moderate annual growth rate of 1 to 2% in home prices, with a total appreciation of around 13,014% by 2028 compared to 2023. This suggests that while homes will continue to become more expensive, the rate of increase will be more measured. One of the key factors influencing the housing market in this period is the anticipated stabilization of mortgage rates. After a period of volatility, rates are expected to settle between 5.5% and 7%. This should provide a more predictable environment for buyers, though it may still pose affordability challenges for some. Additionally, the supply of homes is projected to increase as builders respond to the ongoing demand and the market gradually returns to a more balanced state. Demographic shifts are also set to play a significant role. With millennials and Generation Z becoming the dominant buying forces, there is a growing interest in suburban and rural areas as buyers seek more space and community amenities outside traditional urban centers. This shift in demand could lead to increased construction of single-family homes in these areas, while urban markets may see a rise in apartment and townhouse developments to accommodate population growth. Technological advancements are expected to continue transforming the real estate landscape. Innovations such as virtual tours and enhanced data analytics will likely streamline the buying process, providing greater transparency and efficiency in transactions. These tools will empower buyers and sellers with more information, helping them make informed decisions in a competitive market. Overall, the housing market from 2025 to 2029 is poised for steady growth and evolution. While challenges like affordability and regional variations persist, the combination of demographic trends, technological innovations, and a stabilizing economic environment offers a promising outlook. As always, staying informed and adaptable will be key to navigating these changes successfully. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.